Good evening, and thank you for joining us. My name is Ashley West with FTMIG Events, and tonight we are being joined by some of the team from Nicola Mining Inc. President, CEO, and Director Peter Espig, VP of Exploration Will Whitty, Senior Geologist Kairan Liu, and Corporate and Investor Relations Bill Cawker. This evening, Peter is going to give a presentation focusing on the company's revamped website. He will go over the company's assets and the excitement this holds, as well as an overview. To begin, we are going to show a short clip that highlights the new Craigmont property and showcases the importance of location. Once the video ends, Peter will take over with an overview of the revamped website and then into his presentation. We welcome you to post questions in the Q&A section of the room, and those will be asked once Peter has completed. With that, I will start the video.
Real estate is the same where they say location, location, location. Well, we are the corner of the Highland Valley Fault and the Nicola Fault, and we're like the corner lot both ways, which are famous for copper. It's the most prolific copper region in Canada. We're the corner lot of two very large faults, the Highland Valley Fault and the Nicola Fault, and you can just go up and down these faults, and what you'll see directly north to us, you'll see Highland Valley Copper, which has multiple porphyry pits. On the Guichon batholith, which we also have half of our properties in the Guichon batholith. And then as you go further on the Nicola Fault, you'll run into New Gold, New Afton, Afton, Copper Mountain. And then as you go further north, you'll go to Highland Valley, the Lornex pit, all the way up to Mount Polly and to Red Chris. So if you were to look at the copper belt of British Columbia and you were to go like this, we're the corner. Not only that, we're also the unexplored corner. And we're actually the first group to own 100% of the asset since 1961. We've gone through and we've created a database of historic drill holes. We continue to put all the historic drill holes into a 3D model, and we continue to really understand the property, not just on the areas that we're doing exploration, but on the macro level. What we know is that we have a great asset. We certainly believe that this is going to be a mine at some point in the future. To put it in perspective, I think we need to understand a few points here. So one of the points that get brought up to me as well, we hear of copper projects in Chile that are 0.9% or 1% copper, or in Africa, in the Congo, where there's high-grade copper assets. And what BC offers is that BC offers amongst the lowest cutoff grades of copper production in the world. So if you were to take the top 10 lowest producing copper mines globally, 4 of them are in British Columbia. Our neighbor Highland Valley has a throughput of 0.2%, approximately around 0.2%, and their cutoff rate is about 0.15. You have these grades that are not, they're low, but they're still profitable. And so this is what makes our project, again, exciting, is that we're in this politically stable environment. We're close to the coast. We're right on a highway, and we're in a cheap mining jurisdiction, and we have high grades. And I think if you combine that all together, that's pretty exciting.
Okay, Peter, if you would like to do your sharing of the screen and go over the website, you're free to do that now.
Thank you, Ashley. I was a little bit surprised watching that. I think it's the first time I've watched the whole video because I don't like listening to my own voice. So
you should. It's a good video.
Very quickly, what we're going to do, and I'm just going to spend 5 minutes on this, and it's just looking at the website and how to navigate it. So it's quite simple. So if you on the first page, what you'll see is there are videos that you can click. So this is a video that talks about our projects. If you scroll down here, you can see management, board of directors. We've got a really solid team. Here's my background. Dr. Paul Johnson, Malcolm, our management team, which includes Will Whitty and Kairan, who are both on this call today, and then properties. Now, if you look at, so I'll talk about it a little bit more later, but we have, the new Craigmont property, and there's a lot of detail, a lot of information on the new Craigmont property. Same with Treasure Mountain. And in a way, Treasure Mountain's a bit of a forgotten asset, But remember that in 2012, the company had a market cap of 230 million based on the value of Treasure Mountain and the mill site. And then we have information on our sand and gravel property, which recently we just announced that we started construction of a cement plant as well. The mill is located at the new Craigmont property, and here I'll just click this on. You'll get apologies, it's slow. So, this is the mill, and there's every page has different videos, but you can see the mill as we scroll down. And this slide here just shows you how large the mill is, and it was really built for expansion. And you can have this is a great video, so or a shot of the entire property. And here, remember that all this land here that you see on both sides, this is owned freehold. We own the land. And then investors, so that you can go to the corporate presentation, corporate information, financials. And this is also very important because we spend we really embrace ESG. It's in the company section we even have an ESG initiative explaining it. But we're very responsible for the environment. On the dust reclamation, you can see here the difference of the historic site and the areas that we've seeded. And so we've done, and we continue to seed and to reclamate for dust purposes. And then you can go and there's a bunch of videos here, all our news updates are on the news. And so that's really, you know, the site itself. It's quite informative. I encourage people who are listening to this to go to the site, and you'll get a lot out of it. A lot of work has gone into it. So with that, I'm just going to stop sharing this, and I'll go to the presentation. But just I wanted to give a few key points about where we are today and where we're going. So we have multiple intercepts of copper. We have strong operational cash flow, and we have a very solid plan for 2024 on the exploration side, and on the operation side all the way into 2025. So there are four key assets that we have. So I'm going to start with the least important to the most important. So they're all important, but on the bottom we have Dominion Creek property. Now this is a very unique situation where, and there are several of these pods, we call them, in British Columbia. And so you have these high grade pods of gold bearing vein, but they're not that large. So you can see here, grab samples, and we did chip sampling at surface, and you're talking like 2 ounces of gold per ton. The problem with this asset is that it has 10 to 15,000 tons, and that's really all that's known. So it doesn't justify building a mine, it doesn't justify building a mill, and it's a perfect opportunity for a company like us to consolidate these small projects. So we own 50% interest and a 75% economic interest. Then we get to Treasure Mountain. Again, Treasure Mountain is it's a fully permitted mine site, so it's not exploration. And it's a high-grade silver mine located approximately 90 minutes from our mill. And then we go to and this mill and Treasure Mountain, they were kind of constructed at the same time. So the mill was constructed in 2012, 13. We own 100%. It's on land that is owned by us 100%. And you'll see later on, it's not only about the location for the copper asset, but it's also location of where the mill is. And then our key asset is the new Craigmont copper project. And I'm not going to talk too much about that now because I'll let our geologists get into that. But all four assets combine to, they're all synergistic. They're all located in British Columbia. We also have a rock quarry permit, a gravel permit. So we have 5 permits, and we all know how difficult and cost consuming garnering permits can be anywhere in the world right now, and we have 5. So location again, We're located in southern British Columbia. So this is where Treasure Mountain is. You can see where the new Craigmont project is, adjacent to Highland Valley, very close to New Afton. And you can see where the other key projects in British Columbia are. And here you can see the Grinnell terrain. And you can see that we're kind of like in the thickest part of it, in the corner, as the video talked about. If you blow it up even further, and this is really important. So, this is where the Meritt Mill is in the new Craigmont project. And remember that Highway 8 was built because of the historic Craigmont mine. So, I mean, we're right on the highway. You could literally roller skate to our site. We're on the BC power grid, and we've got water permits in place. We're near major cities. And, a lot of one of the significant costs of your production in mining is your power and your fuel costs. And because we're right on the grid, so we pay 5.5 cents per megawatt. So, and we also have a contract with Nicola Green Energy, so we're receiving their fly ash historically, and then we receive their fly ash, they pay us, and we buy the energy power off them. So, in one way, you could almost conceptualize it that power to run the mill is free, and that there's not many assets in a location like ours. So the Meritt Mill site. Here you can see it's built. It's state of the art. We continue to do upgrades. Right now, we're completing upgrades on internal automation. And the mill was built for expansion for production. And again, here you can read here, the Meritt Mill is the only facility permitted to process gold and silver from any source throughout the province of British Columbia. And our permit requires us to only notify the Ministry of Mining 10 days ahead. So there's a lot of power in that. And I love this slide because this slide, if you look at it, every one of those dots that you see symbolize a project of greater than 7 grams per ton and higher than 50,000 ounces gold. And the only mill permitted to receive the material from any one of them is our site. And it's getting more and more expensive to build a mill. The environmental testing, the feasibility studies to build a mill are getting more and more expensive. So the way I kind of conceptualize this, I look at all those little dots as airplanes, and we're the airport, and we're the place that they should come to land. And last point I make is that we've been public on several milling agreements / partnerships that we've entered into, and we pride ourselves on being a good partner, because what we want to do is we want to show that our partners in the gold production are profitable, and that our mill is a low cost mill, and that both sides benefit from working together to cut costs and focus more on the profit share rather than anything else. And so that's something that we hope that if we can help facilitate projects going from a bulk sample permit into a mine, I think we've done a very good job. And with that, I'll stop sharing now, and I'll let the geologist talk about the new Craigmont project.
Copper was first discovered at New Craigmont in 1897. Between 1897 and the early 60s, there was on and off production of copper. And then from the early 60s to the early 80s is when the Craigmont mine that's there today was in production. There's both an open pit and then an underground, which produced 34 million tons of ore grading at 1.3% copper with a cutoff grade of 0.7% copper. So it was a high grade copper mine. And then after closing from 1993 to 2014, the tailings were reprocessed to produce magnetite. I'll let Kai give us the geology overview.
Yeah, so the regional geology. So we are on the east side of Queensnell, and the dominant rock here are the Nicola group rock, which is composed of sedimentary rock and volcanic cluster rock. And this rock, the Nicola group rock, is locally intruded by many Jurassic to Jurassic basalts, which including iron mask basalts and the Gishan Creek basalts. These two basalts are the most important one because they hosted the world-class porphyry deposit, Highland Valley copper mine and the New Afton copper gold mine. And we are just south to the Highland Valley mine. Can you go next slide, please? Yeah, for local geology, the property covers the southern contact of Gishan Creek basalts, and the Nicola group rocks in the property is composed of volcanic classic rock and sedimentary rock. The Cragmont scar deposit was hosted by the Nicola group rock just south to the basalts. The later Cretaceous volcanic expansive bridge group overlies on the western portion of the property. Locally, there are two quartz feldspar porphyry or quartz feldspar porphyry stock in the property, and they are called Cawker stock. Next slide, please. The Gishan Pluton intruded Nicola group rock, and the contact is near vertical and steeply deep south dipping within the property. Approximately 2/3 of the Cragmont ore body occurs within the scar, hosted by the limey sandstone, limey siltstone, the carbonate-rich unit of the Nicola group rock. The scar is confined to a narrow, steeply south dipping zone, inferred to be parallel to the contact between the Nicola group rock and the Gishan rock. Next slide, please. Two types of mineralization occur in the property. First one is scar. Stratigraphic hosted scar comprise copper ore of malachite, chalcopyrite, chalcocite, azurite, and a little bit of bornite. And the iron ore mineral of the specular is composed of specular hematite and magnetite. The major gum mineral are epidote and garnet and actinolite in the scar. Porphyry-style mineralization is composed of disseminated and one-hosted copper mineralization, which commonly associated with pervasive sericite chloride alteration and potassic alteration. Next slide, please. Historically, in 1960s and 1970s, some geology claimed the Cragmont scar may not associate with magmatic hydrothermal event, and the old geophysical methods are limited. The old geophysical methods struggled with the thick overburden and the Kingswell group, which make the exploration very challenging. Nowadays, we have a much better understanding of scar. There must be an intrusion fluid source somewhere. The modern geophysical surveys can reveal a lot of information under the overburden now. Moreover, since 2015, the ownership of the property has finally been consolidated by the Nicola mining. Now I think we are ready to have some breakthrough on the exploration here. Next slide, please. Yeah. And here are some exploration outcomes. We have drilled many good holes near the historical pit and in the embayment zone west of the pit, which yielded many high-grade intervals up to more than 100 meters. This suggests that the ore body is way much larger than what people expected, and we have a lot of work to do to reveal the potential of the project. Next slide, please. The Julian program last year revealed us a lot of critical geology information. It was our first time finding the molybdenum associated with the potassic alteration in the Gishan basalts. This is the evidence of presence of porphyry Cragmont. And now we are working with MDRU of UBC. We're working together, trying to find the causative intrusion and trying to find the fluid source, trying to locate the porphyry system in the property. Next slide, please. So this year we will explore the region west of the historical pit, focusing on three minerals showing. The first one is marb. Marb is a brushstone of quartz diorite. Chalcopyrite, pyrite, and pyrrhotite occurs here as fine disseminations and veins. This is hosted in a quartz diorite with epidote, chloride, and actinolite alteration. This is a hydrothermal brusher pipe target. Next one is Cass. Cass is composed of magnetite brusher and the magnetite epidote chloride scar. So this is a scar target, also hosted in the quartz diorite in the Gishan basalts. Another one is on the western portion of the property, which is called WP. WP is a porphyry target. It's composed of copper hosting quartz veins with potassic feldspar halo. Textbook porphyry target. Next slide, please. So there appear to be an east-west striking magnetic anomaly chain that including known mineralization found in the embayment zone and the Cragmont, and also the Eric zone. So the Craigmont anomaly is hosted in historical mine, where the Eric hosted a high-grade mineralization, but in a smaller scale. And in Bayman zone, we recently drilled a lot of good interval out there. The company has made a lot of success in this 3 zone, and this geophysical anomaly extending to the west, which gives us a lot of promising drilling targets. And then on the picture here, you can see a new discovered mineralization outcrop of CAS. Next slide, please. Let's look at the cross section of this drilling target. On the left side, we can see the embayment zone, Eric, and the Craigmont, where we find the mineralization already. So they have very similar geophysical anomaly, very similar geophysical features with the Marble and CAS. And also the geology-wise, they are also similar along the contact. And we find the mineral showing copper mineralization in all these 5 places. So they're so similar. Only thing different is Marble and CAS has not been drilled yet. So we have a similar geology, similar mineral showing, and a similar geophysics. So only thing different is not drilled yet. So we think Marble and CAS are really promising drilling target for 2024. Next slide, please. Another target we mentioned about is the porphyry target, the WP. WP, as you can see in the photos, we have copper mineralization, we have a quartz vein with a potassic alteration halo, and this is a textbook porphyry target, and it's also close to a huge resistivity anomaly revealed by the 2022 Z-time survey. So this resistivity anomaly can be an intrusion and can be a quartz flood or a high intensity of quartz vein zone. Next slide, please. As you can see in the cross section, so the Z-time revealed as a potential intrusion and the silicification zone, and WP is very close to it. So this can be a huge porphyry system. We just need to put a drill hole on it to find out the potential. And next slide, please.
So just to summarize it, something that Kai had mentioned was that these claims that make up the claim block of New Craigmont weren't consolidated until 2015. And so most of this property hasn't been explored, hasn't even been drilled. And that's because with multiple owners of the different claims, it wasn't really easy or practical to do so. And now we've got the claims consolidated, and we've got the MIAB permit, which is a 5-year multi-area exploration-based permit that lets us conduct drilling and trenching and more geophysical surveys across the property. And we've got these 2 targets, the skarn target at Marb CAS and the porphyry target over at WP, that have never really been tested. And we've got this opportunity to do that now, really for the first time in history. And that's a big deal. The last
I think it's also important to point out that when the Craigmont mine was up and running, that all this ground that you fellows are going to be working on this year, this was never owned by Craigmont. This is all consolidated new ground under single ownership with you guys. So it was never part of the Craigmont mine. So Craigmont ballpark, I was reading figures for 4,000 hectares, all this ground to the west and to the northwest. That's where the bulk of this additional 6,000 plus hectares comes from. So as was said in the video, it's the unexplored corner.
So just as a final thing here that New Craigmont has is these historic waste dumps from the 60s and 70s when mining occurred contain copper. And we did some drilling and testing and have an NI 43-101 compliant resource estimate on the southern dump and the portal area dump. This is an inferred resource, and the studies show that there's a lot of room to do more testing and drilling and to upgrade those resources, both in size and in confidence. And so that's in our plans moving forward as well. That's what I've got on New Craigmont.
Again, one of the things that I like to, because this slide really tells a lot. So if you look at the old Craigmont, and you can see my cursor here, what you can see every one of these lines is a fault, and you can see at a very wide section of where the historic pit is that there was a fault, and then on the other side of the fault, that's where we drill deep, and then you have these other faults. So if you look over here, you can see as this is blown up, this is the historic Craigmont mine. And here you can see on the other side of the fault where they tried to drill and they didn't find anything. And then when you go down to where we drilled the embayment, our very first drill hole that entered into this was 85 meters, a 1.1% copper. One of the holes we had was also, we had, 100 meters of 1.33% copper. And you can see exactly where it's intercepting the holes. Now you go down to the CAS or the MARB, and you can see the only hole that's ever been drilled, for example, in the MARB, and it makes sense, they drilled towards the historic pit, and you can see that they didn't enter into this body that we're looking at. And it's exact same with the CAS. Now, data shows us that they ended in mineralization and then they lost the hole, but you can see exactly where it ended. And you can also look at how big this is, like how wide. I mean, these are very big, exciting bodies. So we're very excited, on the prospects of this year. And, and again, without forgetting about Treasure Mountain, we do have Treasure Mountain. It's a great silver asset. We have applied for a MIAB. We will hopefully we'll keep people updated when it gets received. But really, this is a silver mine. We could reopen it, but the exciting part is the backside of the mountain here. And so we would like to, at some point, look at the backside and do exploration, because the grades that we have at surface justify that. I mean, 900 grams silver, half a gram gold, 19% zinc, 4.66% copper. And so there's a lot there. But just in summary, we have operations, we have operational cash flow. We have the only mill permitted in British Columbia to take third-party material from anywhere in the province. We have a rock quarry permit. We have a gravel permit. We have the new Craigmont project, which has permit M68. We're in the right location. We've done 3 years of work to get to this point where we're actually going to be putting pipe in the ground this year, and we have the Treasure Mountain project. So that's all. It's a very exciting project. We have a great team. We've got Will, who's his background is he was with Freeport Newmont. Then we have Kairan Liu, who's a PhD from Colorado School of Mines. We recently hired Sam Wong, a very experienced CFO. We've got a very solid board: Paul Johnson, Malcolm Swallow, Brent Almland. So, we not only have great assets, but we've got a great team. Thanks.
Perfect. Thank you, gentlemen. That was a great presentation and a great starting point for any new potential shareholders. So we do have some questions here. I guess I'll get right into them, and you guys can decide who's going to field them depending on what kind of a question they are. The first question is, thanks for the update. Does the company have a goal or an end game with the cement plant?
Well, the cement plant. So first of all, the cement plant and the rock and the gravel pit and the rock quarry have a dual function. So obviously, when markets are bad like right now, not having to go to the market all the time for your operational cash flow is important. But on the positive side, so we have a partnership with LNSS, which is an affiliate company of the Lower Nickel Indian Band, and together, the riprap went in 2021. There was massive flooding in British Columbia, so we supplied riprap for the repair of the rivers and the bridges. We supply gravel to First Nation groups, to local communities. We supply gravel to the Ministry of Transport, and it's the same with cement. Our cement plant is now we expect it to be the main cement plant for the Meritt Nicola region. It will be used to repair bridges. So it's not just a cash flow opportunity, although it is, it's also a great opportunity to contribute to the communities.
Great. Peter, are you able to touch on the contract that Nicola Mining has to rebuild the damaged roads in BC? The contracts are not with Nicola Mining. They're with LNSS. So
LNSS is a joint venture between Infracal and the Lower Nickel Indian Band, and so we are there to support them. So the contracts that all I can say is that it's run through them. We receive a royalty, and it was a way that because we didn't want to seem as it's not good to be opportunistic as well.
Mhm.
So we're really on a support role. So yes, we receive revenues from it, royalties, but just as important, so the revenues that come in, because we spend a lot of money and we spend a lot of time on reclamation, and you saw in the website, we're really committed to that. And as part of the contract that we have with LNSS, the funds or the royalties that we receive from the revenues from that business partnership goes towards reclamation. It doesn't go towards management bonuses, or it goes
Mhm.
we wanted it very specifically worded that the funds that we receive for that are utilized towards site reclamation.
Peter, I've seen mention of the company being cashed up. Does that mean the next drill program is already funded?
Yes, like we did do a small flow through, but our program, we can fund that internal. Like, so we have the flow through that we closed on, and then we also have our own cash flow.
Okay. Caroline would like to know, does the cement plant and the mill operations deter from exploration at all?
No, they benefit, because the ultimately, and I always give this example, like there's a Japanese saying, turkeys fly like eagles in a typhoon. And when the markets are really good and the wind's there, all explorers can raise capital. But we need to think mentally that we need to be in a position where we can use our operational cash flow to fund our exploration. So the mill running is ultimately our key asset, and
Mhm.
to be very clear, is the new Craigmont. But the benefit of having the mill is we can use the cash flow from our operations to help support exploration.
Yeah, of course. And most junior exploration companies are not generating revenue. So that is a standalone from your peers selling point, I would
Yeah,
imagine.
there's a statistic that 1.8% of junior mine, or 1.8% of listed mining companies have any form of cash flow. So
Mhm.
you can throw us in the 1.8%.
Yeah, that's good. Hi, Peter and team. Thank you for the town hall today. I'm curious about the company's relations with the First Nations. Also, do your First Nations communities own shares in the company?
That's a really good question. So, I mean, how is our First Nation relationship? Well, we have our rock quarry and gravel pit and cement plant are all First Nation partnerships. So, so do they have shares in the company? They have shares in the partnerships. They own the partnerships, and we receive a royalty. So we have very good relationships with the first, like with especially with the Lower Nickel Indian Band. But and that's something that we the area that there are 31 First Nation bands that we communicate or with, sometimes through tribal councils, sometimes directly. But that's something that we've gotten to the point where we are now because of strong relationships. Without them, we wouldn't be here.
Perfect. Hi, Peter. Are you able to summarize the advantages of investing with Nicola Mining and how you stand apart from your peers?
Um, that's a great question. So my background in my career is in distressed debt. And so a lot of people ask me, and I worked on, I started I worked as a diamond driller for 8 years. So I grew up around mines, but I went on and was a scholar at Columbia University, worked on, Wall Street. And people ask me, hey, what's a good stock? And I will say, I don't know what a good stock is, but I can tell you what a bad company looks like. And so getting to Nicola, in this market right now, you want to hedge your risk, because there's a lot of risk in, financial risk, there's geopolitical, and there's economic risk. And, at some point, people talk about, a market crash or, a slowing down of the economy. So there's a lot of companies that provide good exploration prospects. So I'm gonna, we're not alone in that. So there's a lot of good projects in British Columbia, and those projects can have very, very good drill results, and we're one of them. And so, I would expect us to have very good drill results. And so we're one of many. But then on, as you get a level below that, well, hey, we've got mine permits. So, having a resource and having great drill results doesn't bring you any closer to any form of cash flow, because it takes over a decade to get a mine permit. And, it can take, I think the average time that it takes to get from when you apply for your mine permit to when you start production on a global scale is 14 years. And BC's right in that average. It's like 13, 14 years. So we have a mill permit and we have a mine permit. So that's, makes us very unique. And then we're also hedged on the downside with our cash flow. So yeah, there's a lot of great projects for exploration. We are a great projects for exploration, but we're a green metal, which is copper. We have permits associated with our exploration. We have permits associated with a mill, and we have downside protection on cash flow. So that's the way I would distinguish, our opportunity versus others.
That's great. Thanks, FTMIG, for the morning drive. I definitely wanted to join the webinar after hearing Peter talk about his past. Peter, looking at copper's 1 month and your company's 1 month chart, how correlated would you say your stock is to the price of copper?
I would say not at all. And again, that's a great question, but I think, and I'm hearing this. I had lunch today with some mining CEOs, and we had dim sum, and we were talking about, the what's going on, and like in the markets, and because my background, they were like, hey, what's going on, Peter? Like, why is our company, because it just happened we're the only copper project, but they're all gold, and they're like, gold's up $30 today and our share price is down. What's going on? And I'm like, well, there's a big difference between acquiring physical commodities and producing them. And you're not even producing them. You're the hope of a ticket to eventually, maybe in a decade or 2 decades, to be a producer. And so there is no, I would put the correlation between, exploration plays and metal prices as very, very low. What I would say, though, is that high grade drill results should actually not be affected by like lower metal prices, because high grade trumps low metal prices. And high metal prices doesn't mean that low grade projects should move up either. Like, so there's not a really strong correlation until you are a producer. But that said, high grade will always allow a company to move up if they're showing high. And you can look at high grade drill results in copper, gold, silver, like on a global scale, and they typically function based on the grade of the success of the drill program, and not the correlation of metal prices.
Perfect. Hey, Peter, thanks for this presentation. I enjoyed your morning drive, and learning of your competitive nature instills confidence in shareholders. As a newer investor, where would you point me to get a better understanding of your experience in assisting distressed companies?
Well, that's a difficult. My advice would be stay away from them, because it certainly hasn't helped my life expectancy. Let's put it that way. And I think that one of the things, though, what's really important with when you look at distressed assets or opportunities. So it would have been very easy, for example, Nicola Mining, to just follow the same path as other BC miners or other exploration plays, even though we had a mill. And when I say that is you go out, raise money and drill, and you go out and raise money and you drill, and then you're waiting for something to happen or somebody to bring you material so that we can mill gold or silver. So that's a pretty easy platform. But saying, okay, hey, we're gonna branch out and do a rock quarry, or we're gonna do a gravel pit, or we're gonna do cement, or so it's creating it's that ability to look at how do you create new revenue streams from the same assets? And so that's where, I would say in distress, the main thing is to understand how it got there. And the second thing is to not do the same. And so, and this was a distressed asset. I mean, when I took over in 2013, it was, a week away from insolvency, and we took it into CCAA and we had it exit. So we took it out of CCAA. So it's creativity is very, very important. And and that includes in mining. I often say that sometimes, what you need to have a successful mining company are two things. One is great assets, and two is great management.
Mhm.
And you need both.
Yeah, that's often if you want to see how a company is going to do, you look at the management and their history, right? How would you define success for 2024?
I'll let the geologists, gentlemen, how would you define success? I'm putting you on the gun here. So
I think advancing our understanding of the porphyry systems that are here and vectoring towards them. We made good progress with that last year, where really we made these initial discoveries of those alteration assemblages that hadn't been recognized. And that's pretty exciting, because seeing that right next to a high-grade skarn in the perfect geological setting for a porphyry is pretty exciting. So if we can follow up on that and get into the next zone of alteration that would get us closer to the deposit, to me, that would be success on that front.
I would define success as discovery. So we are not only looking to extending the knowing ore body, we are also trying to find a new one to get a new discovery. It's like definitely we're wanting looking at porphyry, but we find a new scar is also a success.
Awesome.
yeah, and so just on my side, in complete layman's terms, because you've got two super smart geos, and I'm not like that, but for me, it's like, hey, show me the metal, right? I'd like to see grades, and that's on the exploration side, and on the corporate side, stability. Continue to grow, to show stable cash flow going into 2020, from 2024 to 2025, and to have that mill operating. Ultimately, we want to be milling gold and silver, and we want to be exploring copper.
Perfect. Okay, final question. Hi, Peter and team. You have historically suggested you would look at the silver mine when the price improved. Silver has really been moving. Is it getting to the time that Treasure Mountain can start to provide cash flow? Thanks.
That's a really good question. So yes, silver has been moving, but it's gotten above $25 US. That was always like a key number that we kind of looked at, and it's been there, but it actually hasn't been there that long. And so this summer, one of the things that we will do is we will spend more time looking at Treasure Mountain. I think, it's been a while. So, one of the things you often hear management or CEO saying, just jump right in and get your hands dirty and go at it. Well, that's not our style. Like, I would say that, we're very methodical, and we, the geological team, myself and the milling team, and the mines team, we spend a lot of time talking together, and it's creating, because we have a finite, number of people who work for us. So our ability to allocate human resources towards projects is a bottleneck, because we're not a huge company. So first, the priority will be having a good exploration program at Craigmont, and then second will be, okay, now as gets stabilized and we're starting to understand more, we can open our eyes towards Treasure Mountain and to, both exploration and to operations there.
Okay, we did have another question sneak in, and I would just like to add to it.
Oh.
The question is, do any of the geologists own shares in the company? And on that note, does management take their salary in shares?
We both have options. So definitely our best income is making good success in the company, and our option will be sweet.
So one thing that I did, so I think last year was the first year. So I took over in 2013. So really it was last year was the first year where I actually took money out of the company rather than putting money back in. I'm a major shareholder and I've never gotten my shares at a discount or via Shell or anything. I've always participated in every, offering, that, shares converted all my options. So last year I did receive a salary. I always exercise my options. So to put money back, and that's a really good question because I like it when management is vested, and that's why one of the things when both Kai and Will joined is we gave them a lot of options because we want to incentivize our employees. So now looking at the shareholder structure, the largest shareholder is, as a conglomerate, as a group, would be BMO. That would be followed by CCM, a German fund, and then another European fund, and then I would be next.
That's perfect. Are any analysts covering the company and the stock?
And that's we've had several proposals to cover. You can always have paid for analysts, right? But one of the problems that you see in Canada is that typically securities firms in Canada, they bundle things. So they're like, okay, we'll raise you money, we'll raise you capital, and then we'll give you coverage. And so they bundle the services. And
Right.
and in the United States, that's actually illegal. So you can't bundle things in the United States. The analysts have to write very independent and have nothing to do with the investment banking or the syndication groups. And so it's a little bit different in Canada. And so we've been approached by securities firms to say, okay, we'll raise you 5 million and we'll then, cover you in that. And we believe that, 5 million is way too dilutive where we are right now. Like we're in a position where I'm fairly confident that after this year, we'll have enough news out there that, we'll get to a point where someone's going to cover us without having to go through, a raise. And, analysts in general and investment banks they don't get paid, right? So it's a service to their clients and to the funds that they, like, if you look at Wall Street, like I was at Goldman Sachs. So Goldman Sachs analysts, they sell their research to funds that will then utilize that research to use Goldman's, trading desks to do trades. And so it's a little bit different in Canada. And we're not, a junior mining company is way too small to garner that type of structure.
Fair. Okay, that wraps up the question and answer portion of this. I think maybe Bill wants to hop on and let people know exactly where to contact investor relations for any questions. And of course, they can reach out on the website in general. But thank you very much, gentlemen, for joining us today. This has been a great presentation, and I think that you hold a lot of value for people, anyone that's starting off due diligence for your company. I think that there's a plethora of information for them to look forward to, and a lot's coming down the pipe as well.
Thank you.